Happy Friday out there, folks. This is Darius Dale here to present our macro minute for Friday, March 4th, 2022. Starting with markets, we have stocks down this morning, commodities up, crypto down, dollar up, global bond yields down. Big movers, we have Germany's DAX index off 3%, WTI and Nat gas up about 2% apiece. And then the 10-year Treasury yield and 10-year TIPS yield, so both nominal and real interest rates here in the U.S. bond market down 7 basis points apiece. That's a pretty big move. On the macro front, yesterday's February ISM Services PMI data represented the first major shot across the bow with respect to the post Omicron recovery. While 1 month does not make a trend, investors should be on high alert for incremental evidence of a botched handoff from goods consumption to services consumption in the now endemic phase of the COVID-19 era. So, rattling off the data here, we got the headline ISM services that ticked down to 56.5. That's the lowest print we've seen since February of 2021. ISM services new orders that ticked down to 56.1. That's also the lowest print since last February. ISM services employment, that number ticked down to 48.5. That's the lowest we've seen since August of 2020. So we're starting to see some cracks in the labor market there, just particularly from this indicator, not yet represented broadly. ISM services prices. So this is maybe an issue in terms of causing the slowdown, but we saw prices tick back up to 83.1. That's the highest we've seen in a couple of months, and it wasn't just because of supply chain. So clearly, the energy price component is really starting to filter into services activity here in the U.S. Because when we see the percentage of respondents reporting slower supplier delivery times, that number ticked down to 35.3, which is the lowest number we've seen since March of 2021. So again, it's really this energy price impulse is actually having a deleterious impact on services sector activity here in the U.S. We're going to be monitoring this really closely again for a potential botched handoff, which will really serve to catalyze negative revisions in consensus growth expectations. Elsewhere, actually, let me take it to the chart before we even move on. So what I'm showing in this chart here, investors. So we've talked about it on the program that investor consensus, they have this very elevated expectation for growth here in 2022, not just for the U.S. economy, but for the global economy. And embedded in that elevated growth expectation is a sharp recovery in the services sector components of the economy. And part of that is obviously fueled by the quote unquote cash on the sideline, which we've debunked many a times. But just sticking with this theme of the services sector handoff, we're looking at leisure and hospitality stocks and airline stocks through the lens of our volatility adjusted momentum signal. And as you can see, leisure and hospitality stocks are bearish. Airline stocks are neutral, but it looks like they're on the way to being back to being bearish. To basically trying to break down to new lows here. Leisure and hospitality stocks have already broken down to new lows as of yesterday. And so the reality is if you ask the stock market, which is typically the stock market internals tend to be the best economists in the room outside of the yield curve. The stock market internals are telling you that the services sector boom is either already been priced in or is not going to materialize. Either or, neither of those is good if you're positioned for that outcome. Elsewhere, the cyclical upswing in the Brazilian economy continues. So we had Brazil's manufacturing PMI take up to 46.9 in February, it's the highest we've seen in a couple of months. Exports out of Brazil accelerated to 39.9% year over year. That's the highest print we've seen since August of 2021. And then auto sales ticked up to down 23% year over year in February. That's also the highest print we've seen in a couple of months. So we stopped ourselves out of Brazil near the lows in December. That was clearly one of the worst trades we've made in recent months. Paper hands here, just paper hands on that trade. But hey, you can't win them all. Next play. With respect to today's probable range setups, overbought signal in WTI, Euro 5-year forward inflation swaps, and copper. So be aware of that if you're chasing alongside of base metals. Oversold signal in the Euro 1 year 1 month forward overnight index swap forwards. So that's what the European rates markets are pricing in terms of the policy rate on a 1 year forward basis. 10-year bond yield is oversold as a result of that, or partially as a result of that. 10-year JGB yield, 10-year gilt yield, 10-year treasury yield, and the 10-year TIPS yield. So a lot of potential duration risk over the near term from these levels. S&P 500, that is still bearish from the perspective of our volatility adjusted momentum signal with minus 7% downside in its probable range with only 3.3% of upside. WTI minus still neutral VAMs minus 23% of downside, perfectly at its probable range, upper boundary of its probable range this morning. So Bloomberg Dollar Index, bullish VAMs minus 1.6% of downside versus 0.4% of upside. 10-year Treasury yield still bullish VAMs. It's at the lower boundary of its probable range with 47 basis points of upside. Based on how the charts are looking, just from a technical perspective, I suspect this sort of hugging of the probable range, not just in the U.S. bond market, but in global bond markets, is a leading indicator for those volatility adjusted momentum signals to phase transition to either neutral or bearish in the coming days and weeks. And if that's the case, we're going to see a significant degree of the upside in those probable ranges capped off. And we're going to start to see a widening of the lower boundary of those probable ranges. So stay tuned for that to the extent we continue to see markets trade like they have been. Bitcoin is still bearish FAMs minus 22% of downside versus 2% of upside in its probable range. Ethereum bearish FAMs minus 23% of downside versus 8% of upside in its probable range. Our probable ranges on Bitcoin Ethereum, it's white hot for the last 3 or 4 months now. So just be aware of that. Gold, and it's at the still neutral VAMs minus 6% of downside versus 1% of upside in this probable range. So with that, Darius Dale presenting our macro minute for Friday, March 4th, 2022. Best of luck out there and have a great weekend.